The US dollar retreated in today's Asia session, led by a firming of the Aussie dollar after RBA issued a hawkish guidance yesterday. Yo-yo session in the broad-based US stock indices, where we continue to see underperformance of the Nasdaq 100 due to sell-off in several mega-cap technology stocks. At the end of the US session, Nasdaq 100 closed in the red by almost 1%. And oil prices, which is represented by the West Texas crude oil, rose by close to 2% yesterday after rebounding off its 200-day moving average, keeping its medium-term uptrend phase intact on the backdrop of renewed US-Iran tensions again. Very good morning to all and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Wednesday, the 4th of February 2026. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, let's have a quick recap what has taken shape yesterday, and today will also be a toned down, put it with that, a toned down daily dose where I will only cover the charts of the day over here. So let's have a recap what has taken shape yesterday in terms of the intraday performance of the broad-based cross asset classes and as well as their respective events and data. Okay, let me switch my screen over. Okay. So I hope you guys have a better view of the screens right now. Yes. So what you could see over here is that yesterday we see a yo-yo session. All right. So all the three major US stock indices are in the red yesterday. So the SPX is down by negative 0.84%, pardon me, after seeing a recovery in the last 2 hours of the trading session yesterday, which is from 3 a.m. all the way up to 5 p.m. So there's a slight bounce. And the Nasdaq 100 was the worst performer, down by negative 1.55%. And there's a slight bounce up as well. So the reason why Nasdaq was the worst performer as it continues to churn within this sideways range configuration was due to the weakening of several mega cap technology stocks, especially in the semiconductor space, where NVIDIA dip or drop by negative 2.84%, followed by Broadcom down by negative 3.26% and Micron down by negative 4.19%. So Microsoft is also down by negative 2.87% over here. So in today's early Asia session, after the close of the US session, which is after 5 a.m. Singapore time today, AMD, one of the key players within the US semiconductor space, reported their Q4 earnings over here. So AMD shares also dropped in the after hours session. They are down by what I think negative 8% or so. So the reason why AMD fell that much is because of the forward guidance. All right. So for the first quarter, AMD says it's expected to have 9.8 billion in revenue, plus or minus, but that come in slightly we call it above expectation of 9.38 billion. All right. So the expectation was not really surpassed that much, only slightly above. So that actually explained the reason why that AMD shares fall, because markets expecting a better, we call it expected better revenue guidance, much more than what they're expecting at 9.38 billion, but they only came in at slightly above 9.8 billion. So despite the fact that the Q4 earnings top expectation over here, so the AMD shares actually fell by what, negative 8% or so. So if you look at the AMD share price very quickly, AMD share price, all right, so it fall by 8%, all right, negative 8% over here upon the releasing of their Q4 earnings, and as well as their not so rosy Q1 forward guidance. So if overall, due to this lackluster after hours performance of this key semiconductor player in the US stock market, which is AMD, that also causes the Nasdaq 100 E-mini futures to dip slightly lower in today's Asia session as we are speaking right now, 11:10 a.m., which is down 0.12% over here. Then over to the FX market. So if you look at the FX market, the dollar index in today's Asia session, it starts to do a bit of bearish reaction over here from this pullback resistance of 97.70. So this is the US dollar index chart on the daily time scale over here. So if it appears that yesterday, yesterday this is the bearish candle reaction of this 97.70. So in terms of Japanese candlesticks, we call it a chart pattern or Japanese candlesticks pattern. If you take into account of the movement of Monday and Tuesday, with being this bearish reaction, so these two candlesticks represent a potential daily bearish reversal candlestick, which is a bearish harami candlestick pattern right at this 97.70 pullback resistance level on the dollar index over here. So that being said, it kind of kept dollar strength in check at the moment in time. And if you look at the 5-day performance of the dollar against other major currency, the weakest being right now is the dollar against the Aussie over here, which only trading at what, positive 0.27% after yesterday's RBA hawkish guidance. And for the first time, they actually hiked interest rate over here, but that has really been priced in. So what's not being priced in over here was the guidance that is being offered by RBA governor yesterday. So let's take it a very quick snippets over here. So RBA now is on track to be the first developed nation central bank to kickstart its interest rate hike cycle, other than the outlier, which is Japan, which has its own unique circumstances. So right now, given the fact that it's on track, all right, so there is actually some possibility right now based on market observers that they now see another hike in May this year to take the cash rate to 4.1% after yesterday's hike. So what it means that initially there is before the press conference or even before yesterday's hike over here, the consensus is only looking for an insurance hike by RBA to actually combat their elevated inflation pressure that is still inching above the upper limit of RBA target, which is 2% to 3%. So it came in at 3.3%. So that was the trim mean core inflation target for trim mean core inflation rate year on year for the month of December. So right now, given yesterday's hawkish guidance by RBA, and they also upgraded their inflation trend forecast for this year, so that actually boosted expectation that it may not be only one insurance hike this year by RBA. RBA may do another hike in May, and potentially some observers also mentioned that it could actually do a total of 3 interest rate cuts in 2026. So that actually causes the Aussie dollar to rise as well. So later I'll share with you the technical chart of the Aussie dollar is still pointing up to a firmer Aussie dollar trend that has really kickstarted at the start of this year. So later I'll do an updated chart on the Aussie dollar. All right, so this one particular news flow. Then back to the situation in Iran and we call it US. So we know that this is a kind of an on-off button depending on how Trump wants to play the game, and between Iran as well. So yesterday, what you see over here is that Iran, despite the fact that, you know, early over the weekend, Trump mentioned that there's a potential de-escalation between US and Iran, and US and Iran negotiators will come to the table to talk about some deal on this weekend. But it appears that this talk may has this Iran-US talk or negotiation talk may be now in the back burner. So after what happened over here was there's this so-called geopolitical tension that came into play, and due to the fact that there was this so-called US flag oil tanker was hauled by Iranian ship in the Strait of Hormuz over here. So we know that Strait of Hormuz is the vital waterway where oil tanker pass through for the global trade in oil. So if there's any so-called flare-up in tension between US and Iran, Iran could actually use the Strait of Hormuz to their advantage by shutting it down over here. So yesterday, the US flag oil tanker passing through the Strait of Hormuz is being harassed by Iranian ships over here. And another news post saying that Iran now demands changes in venue and scope of talks with the US. All right, so it appears to us that whatever de-escalation opportunity or situation that's being mentioned by US President Trump of the weekend, the probability seems to have slipped down for now, given the latest news flow, and that's why explaining the WTI crude oil price continues to be in a firmer trend in yesterday's US session and continues to trade above their 20-day and 50-day moving average. So overall, the firmer oil price trend, at least in the near term, after able to hold a base at the $55 per barrel, seems to be still intact over here. And in today's Asia session, there is also one news flow or not news, but a key economic data I want to highlight is up from China over here. So China, give me a minute. Okay, so China reported their so-called, what's this? Sorry about that. Yeah, this one, the services PMI data. So this services PMI data in China, there's this one called MBS. So MBS is being compiled by the government statistical board. Then over the other services PMI data is compiled by a private sector firm. Previously was Caixin, and now they call it Rating Dog. So Rating Dog privately compiled China services PMI actually rose above expectations slightly. Continue to be a phase of expansion. So previously it was at 52. Markets expecting a slight dip to 51.8, and it rose slightly above the expectation. And also previous December print of 52 came in at 52.3. So if you look at the trend, it continues to hover around above the 50 level mark. All right. So there's actually a slight recovery, but not that great yet. So this is the highest level in the past 2 months of November and December. So you look at the 3-year trend, all right, it's still pretty much flattish over here since the May 2024 peak of 54. All right, over here. So after that, it's rather flattish. So, but still hovering above that expansionary phase of 50. So we're talking about the rate, the rate of growth is not moving up that much yet over here. So that being said, right, it didn't actually create a real positive feedback loop into the China related stock market. So if you look at the Hang Seng index, is still not trading up in the green as we are speaking right now, still down by negative 0.75% over here. And the CSI 300 index, which is the A shares listed in Hong Kong, listed in Shanghai and Shenzhen Stock Exchange, pardon me, which is a broader base of 300 big cap stocks in China, down slightly, negative 0.12%. And the smaller benchmark China A50 shares, which is the top 50 shares listed in the Shanghai Stock Exchange, almost trading unchanged right now. But if you look at the rest of other Asia market or Asia Pacific market, they continues to be in a bullish tone, all right, where the Australia ASX 200 is up 0.5%, the KOSPI up 0.28%, our STI up 0.13%, and even the Nikkei 225 is down slightly, negative 0.6%. But if you look at the futures market over here, which taking into account of yesterday's US session, is in fact trading near the session high, which is 0.5% over here. So overall, what we could see over here is that the Asia's Pacific stock market as a whole didn't manage to caught that so-called yo-yo bearish sell-off in the US mega cap technology stocks, and continues to outperform in general against the US stock market. So that is pretty much in play due to this new sector or geographical rotation, where we continue to expect non-US stock market to continue to outperform, especially emerging Asia and the Asia Pacific stock indices. All right, so now let us go to the second segment. So to do the second segment, I will do some updates on the charts that I share with you guys before jumping into today's charts of the day. All right, so let me expand my screen. All right, so that you guys can have a better view of the charts. Okay, here we go. So let's start with the FX market. okay, which is the Aussie dollar. All right, so let's look at the daily chart of the Aussie dollar. So this daily chart of the Aussie dollar, very clearly, since the start of this year, we are in a medium-term trend and a broad-based major uptrend since the low of 9th of April 2025. So previously, it's trading in April 2025 all the way up to December last year. It's been trapped inside this expanding wedge configuration. At December 19, it broke out from this former long-term circular descending trend line that is linking the highs since 25th of February 2021 high. So that is what breaking out above what close to more than more than 5 years of resistance, which is a significant milestone. And what we have over here is that on the recently, 23rd of January, it broke up this expanding wedge range resistance. So solidifying or reinforcing the medium-term uptrend phase and a major uptrend phase as price action continue to be entrenched above the rising 20-day, 50-day, and 200-day moving average. And right now, it's all being supported by an intermarket fundamental factor, which is this difference between the 2-year Aussie sovereign bond yield minus the 2-year US Treasury yield. So this is a spread. So what you could see over here is that the Australia 2-year government bond is trading at a higher premium compared to a similar 10-year, which is a 2-year US Treasury yield. So why I use 2-year, why not 10-year? Because 2-year sovereign bond yield, be it Australia or be it US, they actually represent very closely a sensitive, highly sensitive proxy to their respective potential future monetary policy guidance. So what it means that this continuing expansion of this yield premium, that means 2-year Australia bond over 2-year treasury notes, is further supporting Australia bonds that is having a higher yield premium compared to the US treasury notes. Eventually, that would actually potentially attract more inflows into the Australia sovereign bond market, in turn supporting this ongoing bullish medium-term and major uptrend phases on the Aussie dollar on the daily time frame chart. All right, so on the bigger picture, the Aussie dollar no doubt is trading in a major and medium-term uptrend phases. All right, supported by this rising 2-year Aussie sovereign bond yield premium over the 2-year treasury yield. Okay, then with that, that is the longer term picture. So what does it look like in the intraday basis on the hourly time frame? So on the hourly time frame, the Aussie dollar hasn't broken above 70.90 yet, which is its current 52-week high that was printed on last Thursday, 29th of January. But it continues to trade firmly above a series of higher low that has started to form on Tuesday, on Monday US session. And what we could see is that the RSI continues to hover above the 50 level and also starts to print out a series of higher low as we are speaking right now. This is on the intraday basis, the hourly time frame chart. So on the hourly time frame chart, intraday basis, it seems to us that the Aussie dollar still has some momentum to go by. And given that it starts to print out a series of higher low, I will actually tighten my short-term pivotal support level from yesterday 0.6907 6890 to 0.6940, with the first intermediate support level to watch will be at yesterday's US session low 6977. First resistance 7090 for sure. Above 7090 potentially exposes us to 7140/7175 next, which is a bunch of Fibo extension cluster. And 7140, if you go back to in time on the daily time frame chart, that is also coincide with the medium-term swing high of 2nd of February 2023. All right, so back to the hourly chart. Only a bearish breakdown today and the hourly close below 69.40 that would negate today's direct bullish bias tone to see it floating downwards slightly to retest 69.07, 68.90 again. So that's the updated levels for the Aussie dollar. So another updated level I share you guys will be our gold chart, gold XAU/USD. So gold continues to trade within this uptrend phase over here. So right now it's approaching our resistance level at 51.69 over here. This level is rather important. Why? Because this level previously it managed to survive after this long hourly back candlestick, managed to state a dead cat bounce during Thursday US session at 1 a.m. Singapore time. Then after that, it started Friday Asia session 7 a.m. Can't go above 5,448, and thereafter it actually triggered off that very steep intraday sell-off that lasted the entire Friday session. All right, so then thereafter, once breaking down 5,169, it staged that bearish acceleration until it hit a minor bullish reversal low on Monday at 2 p.m. Singapore time before this rally take place. So that I mentioned earlier on, there's actually a risk that whatever bounce that we see, it could be a dead cat bounce, and it's now fast approaching this psychological level at 5,169. So given that it's almost hitting this level, so for today, I will have a neutrality stance for gold. So my bullish convection right now is very, very slim right now for gold XAU/USD, given that it's now fast approaching our our key resistance level at 5,169. And this level, if we do into a Fibo extension of this bearish leg down from the all-time high of 29 of Jan all the way down to Monday low, that also coincides with the golden ratio of 61.8%. Okay, so let me shift it to the left side, so the right side, so that you guys could see. Okay, okay, 61.8. Oh, sorry, it didn't shift. Pardon me. What's going on over here? Labels, right? Yeah. 61.8% Fibo retracement as well. So with that, I will have a neutrality stance for today. So I flip to a neutrality stance, neutral between 5,169, as is fast approaching this key minor/inflection level where it may put a halt to the current rebound that has taken shape on Monday, European session 2 p.m. And the lower boundary of the range will be at the 20-day moving average, which is 5,4795. Okay, 4,795. Okay, so this will be the neutrality zone. So I'm not convinced that it may surpass 5,169. So I'll flip to a neutrality stance today, neutral between 5,169 and 4,795. So failure to hold at 4,795, it will unleash another round of volatile movement towards the downside to revisit 4,550, 4,500, and the all-important bullish reversal low that was seen on the minor bullish reversal low that was printed on Monday at 4,405. All right. So this for gold XAU/USD. So another updated level I want to share you guys will be the highly yo-yo volatile Nasdaq 100 over here. So Nasdaq 100 yesterday, we have a very tight short-term pivotal support level, looking for it to retest 26,016. But however, the price action didn't hold at this pivotal support and plunged below it. So it seems to us that this Nasdaq 100, since this high of 8th of December, it continues to trade in this kind of very wild, complex sideways range configuration. So there's no trend at all. And what you could see is that it continues to whipsaw around the 20-day and the 50-day moving average. So given such whipsaw movement, I do not want to have any trend bias for now, unless we start to see much more clearer picture on the Nasdaq 100. So with that, I will have a neutrality zone for today as well, a very wide neutrality zone between 25,092, which indeed it managed to help yesterday after that initial sell-off. After that first half of the sell-off that's being seen in the US session. Let me remove this. Remove this. Okay, so on a intraday basis, I will have a neutrality stance now, given the yo-yo movement that it has undergone in the last 5 days that is whipsaw between the 20 and the 50-day moving average. So I will have a rather wide neutrality zone today on the Nasdaq 100. So it may continue to swing wildly again between 26,016 and 25,092. And given the fact that later there, after the close of the US session as well, there will be one mega cap technology stocks reporting their Q4 earnings, which I'm going to share with you guys later on. All right, so that will be the updated levels on these key asset classes that I want to share with you guys. So now back to the charts of the day. So there are two charts of the day today I'd like to share based on their technical configuration. The first chart of the day will be the Japan 225, which represents the Nikkei 225. So Japan 225 continues to trade above this rising 20-day moving average. And yesterday it printed a intraday high or an intraday all-time high that clearing above 54,565, almost hitting our resistance level at 54,910, 55,050 before dipping a dip and now shaping a bullish reversal again as we are speaking right now over here. So with that, I would now remove this chart. Sorry about that. Let me remove this. Okay, so with that, I will now have a slightly higher pivotal support level, right? No longer at 53,090. So it will be at this swing low here, which is very close to the 20-day moving average at 53,500. $53,500. So that will be my ST pivot. Okay, using a Titan adjusted pivotal support at 53,500, which confluence very closely to this rising 20-day moving average. Have a bullish bias done on the Japan 225 as my chart, one of the charts of the day. Two key resistance levels to watch out on the intraday basis will be at 54,910, 55,050, followed by 55,530, 55,623 level. And if you do a current acceleration phase of this parallel ascending trend line, it also coincide with the upper limit of this minor accelerating bullish channel, right? Only a bearish breakdown below 53,500 will negate this direct bullish bias view for the push up to see another round of choppy minor corrective decline to retest this ascending trend line support that is drawn from the low of 21st of January, acting as a next resistance zone, acting as a next support zone, pardon me, at 52,670, 52,425. All right, so that's for the Japan 225 as one of my charts of the day. The next chart of the day, which is the last one, will be the West Texas Oil. So if you look at West Texas Oil, before I go on the intraday levels, let me share with you the medium-term outlook. So the medium-term outlook, it managed to form a base at the 55 level for West Texas Oil, which represent the West WTI crude oil futures. So it seems to us that from 9th of April until 16th of December last year, it could be a double bottom, for a double bottom. And yesterday's, it managed to stage a rebound right exactly at the key 200-day moving average. So another signs of positiveness. The daily RSI continues to trend upwards steadily, indicating a start of a medium-term uptrend phase. So the key level to watch out for to solidify this double bottom bullish formation, where it may unleash a multi-week to multi-month up movement, will be the breakout of 71.30. So this 71.30 is in fact a major descending resistance from the high of 28th of September, pardon me, 2023. All right, so by breaking up above 71.30, that could solidify the start of a potential multi-week to multi-month up movement, with the next medium-term resistance level to watch will be 75.55, followed by 80.30. So that's from a longer-term chart. But I want to express with you guys is that there could be a potential basing formation, and this basing one is a major one because it has kick-started since April last year at the $55 major range or major double bottom range support level. Now back to the intraday outlook, which is the charts of the day, will be the hourly chart of the West Texas Oil. So West Texas Oil continues to find support. So previously on Monday, we do have a bearish view. So bearish view is more like a retracement. So retracement meet our support level exactly 61.12, 60.64 if you recall, and that exactly bounced off from the rising 20-day moving average and bounce off exactly at the lower limit of this ongoing minor ascending channel that is still in play since 7th of Jan 2026 low. So given now it's coming very close to the gap down resistance that is being formed on Monday at 64.75. So that will be the first resistance level to watch. So today I will have a bullish bias for sure in any dips. So first support level to watch 62.38, followed by the short-term pivotal support at 61.12, 60.64. So only if price action managed to clear above 64.75 later with an hourly close above it, I will tighten my pivotal support to 62.38 next over here, which confluence with the 200-day moving average. All right. So next resistance level to watch after 64.75 will be at 66.50/66.85, which is the minor swing high of 29th January. Above 65.85 potentially take us up higher towards 67.80. However, a bearish breakdown below 61.12, 60.40 that would invalidate today's bullish bias to see another round of minor corrective decline, exposing the medium-term pivotal support level at 59 figure level, which confluence with the rising 50-day moving average. So that's sum up the second segment of the daily dose, which I highlighted some updated levels on the Aussie dollar and the very important Gold XAU/USD, updated levels on the Nasdaq 100, and as well as my two charts of the day for today will be the Japan 225 that is representing the Nikkei 225, and as well as the West Texas crude oil. All right, so now let's move on to the last segment, which I'll be sharing with you guys what are the key data/events to look out for today. So let us start with the calendar first over here. So today will be Wednesday. So around evening time, Singapore time at 6 p.m., we have the aggregated Eurozone inflation rate preliminary data for January. So market will be looking at the core inflation, which is expecting to be stable at 2.3% year on year. That is in the line with the same rate that was previously printed in December. Then after that, we have the important Tier 1 US economic data, which is the ISM Services PMI data for January. So that will be at 11 p.m. Singapore time. Market is expecting a slight dip to 53.5 from the previous December print of 54.4 over here. Then thereafter, after the close of the US session, we have one particular mega cap technology stocks reporting their Q4 earnings, which will be Alphabet/Google. Right, give me a minute. Where is it? Okay, let me push it up to 3-star so you're able to filter off over here. Yes, all right. So Alphabet will report its earnings after the close of the US session, that is after 5 a.m. Thursday, tomorrow, Singapore timing. So that will potentially have an influence on the Nasdaq 100 E-mini futures, when the E-mini futures open their trading tomorrow during the early Asia session. And also another not so major US mega cap technology stock, but still a key player within the semiconductor space will be Qualcomm. So Qualcomm will also report their Q4 earnings results after the close of the US session today. So this is something to look out for in early Asia session tomorrow upon the release of Alphabet and Qualcomm earnings result that could have an impact on the Nasdaq 100 and as well as the S&P 500 once the E-mini futures starts trading in tomorrow Asia session. All right, so with that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off, wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.